Hello and welcome to the channel. Today let's take a look at the market performance and SPX price action for May 2nd, 2025, along with price targets and key points of resistance. We'll also take a look at the S&P 500 constituents that are above their 20, 50, and 200-day moving averages. We'll highlight some of the major economic data releases this week. We'll also take a look at the CME Fed Watch Tool to see how the market is pricing in the expected Federal Reserve rates. We'll close out with a look at the pre-market activity. Let's get started. All of the major indices closed up higher, with the Dow closing higher by 1.39%, S&P 500 by 1.47%, the NASDAQ at 1.51%, and we can see that the VIX dropped to 22.68, which was a 7.8% drop from the previous day. When we look at the sectors, they were all in the green, with financials, industrials, and materials leading. Real estate, utilities, and consumer staples, although positive, were at the bottom of the leaderboard. If we look at the sectors on a 1-week basis, we can see that the industrials closed up 4.32%. Technology was up 3.90%. And XLE was the only loser for the week, closing down 0.5%. The SPX closed at 5686.67 on Friday, May 2nd. Closing up 1.47% for the day and 2.92% for the week. As of Friday's close, the SPX has closed higher for 9 straight days, retracing over 61.8% since we had the intraday low on April the 7th. The 20-day has reversed its downward trend and is now trending upward. The 50-day and the 200-day are still declining, with the 50-day crossing below the 200-day on April the 14th. Of the anchored volume weighted average prices that I have indicated, only the August 5th, 2024 is still decreasing. The April 19th, 2024 has reversed trend and now increasing since I last reported. The March 13th low of around 55.21 was retested on March the 31st, became a support line that was broken on April the 3rd following the tariff announcements. We tested the level from below on April the 25th, so this level once again becomes a support line. Looking at the volume price bars, we see significant purchasing volume above the 5,500 level. This indicates there may be some stranded longs looking to exit trades at the current trading levels, providing additional resistance to continued upward buying momentum. The market may consolidate around the current pricing for some time as the market wrestles with the impact of tariffs, company earnings report, and recession fears over the current quarter. The MACD 12-day moving average has moved above the midline at this point. The 26-day signal line has not yet crossed above the midpoint, but we do have strong momentum at this point. We are also seeing improved relative strength with the RSI above the midpoint at 59.36. The VIX has been on a pretty steady decline since the April 7th high, where we reached a level of 60.13 intraday. We're now sitting at 2268. I'd really like to see us get below this 200-day moving average, anywhere below 20 for the market to really stabilize. Looking at the SPX 5-year weekly market trend report, the SPX is trading at its long-term averages. So we're sitting right around zero there as far as a trend. The medium-term averages, it's trading below, but we are beginning to see some improvement in the midterm trend. And in the short term, we can see that we're trading above the short-term trading averages. So over the next couple of weeks, we can expect that we would be trading over those averages. I received an alert on Friday telling me that the S&P 500 constituents, at least 50% of them had moved above their 50-day moving average. If we look at these that are at the 200, below the 200-day moving averages, they all pretty much crossed below on April the 3rd and have been below those averages since that point. We did have the 20-day cross above the 50% on April the 23rd, and then on May 2nd, we had at least 50% of the constituents trading above the 50-day moving average. We're sitting at about 44% of the S&P 500 constituents that are still trading below their 200-day moving average. This week, there are 12 of my holdings that are reporting earnings, so I'll be watching those closely this week. If you are interested in a deep dive preview on those companies, take a look at the video that I released over the weekend. As far as economic data releases this week, those I am watching closely is the ISM Services PMI that's releasing today. The imports report is not one that I normally watch closely, but I will this week. I'll discuss that a little bit more shortly. On Wednesday, May 7th, we get mortgage applications, and we also have the Federal Reserve rate decision, followed by the press conference. On Thursday, we get the weekly jobless claims numbers. And on Friday, there are 9 Federal Reserve members scheduled to speak. Their comments often move markets. With the Federal Reserve rate decision and press release this week, I want to share what the market is pricing in for rates this year. The CME Fed Watch Tool shows no rate cuts for the May and June meetings. Rate cuts are expected at the July, September, and October meetings, holding steady for the remainder of the year. The market is pricing in 2 rate cuts for 2026. We did have a negative GDP print last week. The GDP Q1 growth rate was reported at a negative 0.3%, the first negative print since 2022. This did drive the markets lower, but it recovered as it was apparent that the higher than normal imports was a major driver of the negative print. The imports have increased over the last 3 months above the mean. The last 2 months, imports are reported by companies trying to front-run the tariff impacts. We reached a record high on January and a slight decrease in February. The imports forecast shows a significant drop over the next 4 months. The Atlanta Fed GDP now was showing a negative print earlier last month, but it has returned back to positive growth at a little over 1%. As we wrap up this morning, let's take a look at the futures. Looks like all 3 major indices are expected to open lower this morning. The Dow looks to be down about 0.6%, S&P futures down 0.75%, and the NASDAQ futures 0.87%. Thank you for stopping by today. I wish you a great trading day and week.